welcome to Big Boy Crypto, home of the BitSquad, the largest and greatest crypto community in the entire universe. This is Around the Blockchain. My name is DZ. It's Monday, August 15th, and we come to you Monday through Friday at 5:02 p.m. Eastern Standard Time, where we talk about your favorite topics with your favorite guests today. I know I say it often, but today is no exception. We're going to go ahead and start on the top right. She's across the pond, but she's in her homes right now. It is Interpret Crypto, and she'll teach you how to read that blockchain. Then on the bottom right, it's Max Wright. He don't know how to do it wrong. He's been in the game so long. Max Wright, always good to have you on here, the contrarian dude. Then on the bottom left, I call him Ox Stacker. I know it's 0x. Let's clear the air. Can I call you Ox Stacker, Forrest?
Yeah, no problem at all.
All right. We got Ox Stacker. Then on the top left, filling in for Ben, sitting in my seat, actually, it is Crypto Taco. Maybe recognize some of that stuff in the background. Wait a minute. What are you playing with toys back there? All right, we're going to be talking about Bitcoin, some major moves it can do to take it to the next level. Also, we have a battle brewing, battle between USDT and USDC, and the numbers are changing, and we're going to cover that. And also another exploit, another stablecoin that fell 99 cents. We're going to cover all those. But before we do, let's look at the crypto market, see where things are heading. And it looks like maybe turning around. Look at Bitcoin on the weekly, just looking very flat there, down about 1%. Ethereum down about 2%, but still holding some strong levels. We see Bitcoin holding above 24, even though it's down slightly, and Ethereum almost pushing that 2K mark. Max, I'm going to bring it to you. These markets, they're just so hard to parse. We're just kind of bouncing around in this channel. When are we going to break out of this channel? What direction are you thinking here?
Yeah, this is a really good one. Man, we're right on the precipice now. We've got so much going on. There's definitely some bearish divergence on the RSIs on several times charts. We've got this rising wedge we're in the middle of right now. And there's plenty of reasons to say, we're going to continue another big leg down. But there's a couple little pieces, for the first time in a long time, I would say, there's a couple little pieces of information that are coming out that kind of give us reason to be a little bit bullish, which is kind of fun. And so it's a tough one. What is interesting is a lot of the shorts got flushed, so that short squeeze has kind of taken place, which we kind of predicted over the last few months. And we've had this bear market rally. Does it turn into a bull market, or is it just that, a bear market rally that is about to continue going down? My money, although the price action has been so good, the news has been good. The big question is all of the negativity already priced in, and we can keep going further? So that's making me lean towards. On the balance of things, I would say we are still ready for a leg down, which means at these high prices, we are at a great position to go in on a big short. But I would set those stop losses pretty tight, because this one is starting to shake my confidence. It could be that the lows are in and we are ready to go up. And I have not thought that for the last few months. I've been very committed saying we're going down even further. But there's a little bit of good news coming out, and so it's making me soften my probabilities, let's say.
Max, I'm in the exact same boat as you. Softening my probabilities is probably the best way to put it there. A month ago, 2 months ago, I was very certain, and just every week, about 2-3% probability is now reduced. Now I'm just like, maybe it was the bottom. Who knows? And just real quick, I want to share this chart. You can see, Max was saying, this rising wedge. You can see it coiling, just getting tighter and tighter as it gets closer to the end. So yeah, it's going to make a move, and the longer it coils and the tighter it gets, the more explosive the movement, either up or down. And we all know, hey, if you want it to go up, the best thing you can do is hit that like button right now. It'll spread this video out. It'll shock the YouTube algorithms if we all do it right now. So hit it right now. It doesn't cost you anything. But let's talk a little Bitcoin and lobbying. There are some moves that can be made, and we had the CEO of Bitcoin Magazine, Dennis Porter. He has a couple funds, the Satoshi Action Fund, political strategist, and he was kind of outlining some things that the Bitcoin community can do to help it get to those next steps. And he was focusing on lobbying, and some of these numbers I found pretty appalling, if I'm going to be honest. It looks like in 21, the crypto industry spent about $9 million on lobbying. Meanwhile, healthcare, $625 million. Basically, crypto, it is less than 1% of all lobbying dollars, less than half of 1%, roughly 0.2% of lobbying dollars is spent on the nascent crypto industry. he was saying there's several successful movements. We could go about this multiple ways. We could try it on the federal level. We tried it on the state level. Federal, a good example is what we're seeing with gun rights with the state level. A good example was weed laws, and he kind of cited how not that long ago wasn't legal everywhere or anywhere, and now you're slowly seeing it. I think it's up to 37 states at the moment. Now, Forrest, speaking of federal, is a one-size-fits-all strategy best for Bitcoin, or would it be better to maybe go on a state-by-state basis? I'm just thinking mainly maybe think of energy concerns. You might have Texas can use it to help stop the rolling blackouts. Might be a little easier for them versus, say, a California or New York. What do you think as far as a federal strategy for Bitcoin? Is that the way?
Yeah, it's tough. I mean, any pro-crypto legislation is going to be good, whether it's for Bitcoin or for something else entirely. Obviously, I would like to see a federal sweep of pro-crypto legislation, something very different than what we saw with the infrastructure bill, but something that's actually very, very supportive of crypto. If we start to see some states take a stance, especially a pro-crypto stance, that may kind of feed up the chain to the federal level where we could actually see some pro-crypto legislation. Or honestly, it could force the issue at hand to the federal level, and we could see negative crypto legislation. So anytime you start dealing with politics, I mean, we can start seeing positive crypto legislation at the state level, but as soon as we start seeing that, it may force the hand at the federal level. And would it almost be better to just stay out of it and let Bitcoin grow organically, let crypto grow organically without any legislation, so that we don't get in a situation where they're negatively legislating against crypto too early before we've hit that critical mass? Some people believe we've already hit that critical mass. I still think that in the grand scheme of things, crypto at roughly a $1 trillion asset class isn't big enough to withstand right now a major hit in terms of legislation, especially from the United States. So my personal opinion is maybe we should just back off a little bit. But obviously, if we push for positive crypto legislation at the state level, it's going to be a net positive more than likely.
All right, yeah, just a good point raised there. It could be a double-edged sword. Maybe we're sticking our neck out too soon, whereas we wait in the shadows like the basement. Hit that like button if you're in the basement. If we wait long enough, it could be a too big to fail situation there. All right, now Taco, he brought up, could be on a state-by-state level. One of the examples the author was given was, with weed, it certainly seemed to work with these marijuana laws. We saw it. One of the main selling points for these states passing marijuana laws was we're leaving tax revenue just on the ground. We all this money, people are buying it anyways. Why don't we tax that, and then we could capture some of this value? So what is the equivalent for cryptocurrency? What are some of the ways we could convince governors, state legislators that, hey, you're going to miss out on a bunch of money, and here is why?
Well, I just Googled. It looks like Bitcoin is about the 18th largest by market cap, company in the world, if you call it a company. So it's definitely up there, and I think it was a lot higher when we had a $1 trillion market cap. So it's definitely big enough to be recognized federally and definitely on the state level. Just like you were saying, the marijuana laws, they were loosened up on the state level, and that opened up for growers and dispensaries and all those jobs that are in between. So I feel like the same thing could happen for Bitcoin. I mean, the education has to be there to set up all these people with a Bitcoin wallet. That's got to be something that's very easy to do and learn about. Of course, you can use YouTube, but for legacy finance people who are looking for that regulation, the state level is probably the best way to start. And as it grows, state by state is going to start copying each other using the same type of laws that have worked. And it's just going to grow from there. So I feel like this is a good step. And what was his name? Porter is on the right track when he's going about in this way.
Yeah, I would agree. And maybe for specific, you say, hey, if it's mined in your state, well, at least it starts its journey in your state. Will they spend their Satoshis there? Hey, maybe they're buying vacation homes. Maybe they're renting cars, going to the movies. I think that's all about equivalent, the same price there, actually. Now, all right, I'm end it here. Interpret. I don't want to ask you about, U.S. laws or, what our governors are doing. You're across the pond of those who can't tell by your accent, but I kind of want to ask you about lobbying and maybe how are things over there? We pale in comparison to the military industrial complex. We pale in comparison to the pharmaceutical companies. What is it like in England? Are you seeing the same thing? Is it every other ad is, got a whole list of disclaimers. You take this pill, it's actually probably pretty bad, but hey, we solved that one thing. Your bum knee feels better, but yeah, don't mind the 19 other things that are now going to affect your life negatively. What do you expect for, across where you are staying at? Does Bitcoin have a lobbying influence? Is the lobbying groups in your country, are they just already too powerful? How's this going to shape out where you're at over the next few years?
Well, the UK is currently trying to be the hotspot of cryptocurrency. So whether this plays out and how they're going to enforce that is going to be interesting. They had a lot of, they were going to look at all the different transactions on the blockchain and try and tax everything correctly, KYC everything correctly. But they have actually stepped back from that and said they aren't looking at transactions on the blockchain at the moment. So they've kind of taken a step backwards from moving forwards, hopefully trying to gain the industry. But with our government, it's not always successful when they're trying to be a hotspot for new growing trends.
Yeah. Especially the more entrenched the country is, the more just red tape there's going to be. It's a lot easier to. Just good point. There are CBDCs, but it's like in a Pacific Island nation where. How many accounts did we really have to make here versus England, America, India, China, other countries there? All right, well, let's move on to USDT and USDC. I pulled up their market caps here. Looks like Tether did have that gap narrowed slightly, but then started pulling away. You can see here Tether, 67 billion market cap. USDC, $53 billion market cap there. And it looks like USDT is up over $2 billion over the last 30 days, whereas USDC has shrunk. Why has USDC shrunk? It actually wasn't people cashing out. It was USDC freezing the Tornado cash fund. So hundreds of millions of dollars there locked up. Now, at the beginning of the year, USDT had a market share 47.5%. Circle had 25. Now, Tether from 47.5%, basically almost 50, now all the way down to 40%. So their slice of the pie is shrinking, even though the pie is growing. But it looks like maybe the tables will turn. But there's this whole narrative of USDC stealing funds. We call it freezing funds. We can call it stealing funds. Max, I kind of want to know what your take is on this. Is this the beginning of the end of USDC's maybe ascent to the number one spot? I think if you asked us 6 months ago, we all said Circle's going to take over eventually. It's going to pass Tether for sure. But now this seems like the first road bump, the first speed bump here. Does this derail their dreams?
Yeah, and that is kind of inevitable, right? As you grow, you have to go through all the hurdles that the one before you is it like going through. I remember this big time with the Bitcoin Ethereum world, like going back 4 or 5 years, like back in 2017, and people were talking about the Ethereum flipping, and Andreas Antonopoulos made a great point. He's like, Bitcoin has had to be a trailblazer and go through all these headaches and scaling issues. And he said, mark my words, Ethereum will have scaling issues as it approaches it. And it turned out to be extremely prophetic. And, now, Ethereum's spent years and years and years trying to solve its scaling issues the same way Bitcoin had to do it with Lightning. And so I think we're in the same kind of thing that, the Tether got really big, really fast. It had those kinds of scaling issues. It gets more press, it gets more negative press. These kinds of things are relevant. And then, you look at these new and upcomers and they're like, oh my God, it's a nice clean shirt. No marks on that one. Let's put that shirt on. As it grows, it ends up having all of the same issues that the other one did. So, I think that's going to play out a lot. I think what is kind of interesting at that these two coins, I think they both have a fair amount of respect from the community, and the differences are fairly kind of minimal, in my opinion. There's all, as we'll find out again in our next story, all kinds of problems with other kinds of stable coins, but these two seem to be doing it right. And I think they're gonna tussle over this for years and years and years until hopefully one day, maybe perhaps we get either an algorithmic stable coin or some kind of coin where a stable coin which works and protects us from a rug pull by governments. Take taking the cash out of their bank accounts, which is
Yeah.
obviously the biggest threat, and also the biggest dream for the entire crypto community is how can we have a stable coin like that, which, by the way, heads up, we do have this. I'm pretty sure it's going to get launched before the end of this year. If my memory serves, I think it's called Toro. This is a stable coin, and it will be able to be transferred around on the Bitcoin Lightning Network. So we're talking about completely free. There's no fees in this, and a stable coin on the Bitcoin network. That could just obliterate all of these if it is done correctly.
Yeah, and somewhere Jack Mahler is like wiping a tear just thinking about it. Crypto Billy, NFT Alpha Show, best NFT review in crypto. Thank you very much, Billy. All right, now, Taco, are you sitting down? I'm going to ask you about stable coins. Don't worry, I'm not bringing up UST. I'm sorry, I have to bring it up every time if we're talking stables here. But with this recent action by Circle, so those watching at home, just tune in. Circle, they froze the assets of wallets linked to Tornado Cash. Now we're also seeing a little bit of a reversal. Circle was on the way of taking over Tether there as far as market cap. Now we're seeing a reversal. Some of the whale wallets starting to feel a little iffy about it. We have people, running protocols. DAI, the CEO of DAI, raising concerns. So we have a lot of people coming out of the woodwork, with criticisms of USDC that just wasn't there before. Does that change your opinion on USDC? What is your 2 cents on this USDC versus USDT? What do you prefer?
Well, I prefer any stable coin that actually stays at $1. That's at the end of the day what we want, and hopefully it's as decentralized as possible. So USDC and Circle being able to freeze that USDC, like a thread on Twitter the other day was like all these like very high end addresses like Vitalik, Do Kwon, whatever, all those guys. People were just sending the 0.1 ETH to them via Tornado Cash, and all that USDC that funneled through there, they could lock it up. So I never used it, so my USDC is safe. But from like a business standpoint, if you want to like hide the amount that like your salary of your employees is getting, and you run it through a Tornado Cash, that's like a real world utility and use for it. So it kind of strikes me as odd. Like the CEO of Celsius, he's free, he's rich. The CEO of Voyager, same thing. Do Kwon, he's free, he's roaming around, no one knows where he is. But the actual developer of Tornado Cash is in jail. So someone who made some code is in jail right now. So I think that is like a big issue in our space, writing code and just for anybody to use. It's open source. I don't feel like that's the right way to go about this. But at the end of the day, like, there's bad actors everywhere in legacy finance and the regular markets. Like you can launder money through a bank. You just need to do it the right way. So it's like a catch-22. Like there's good and there's bad. And I mean, if you're on the end that's actually doing things properly, you're not doing this for malicious criminal uses. I think that's perfectly fine.
Yeah, there's the good, there's the bad, then there's me, there's the ugly. But let's get down to the ugly nuts and bolts of it here. Now, Forrest, a month ago, USDC just seemed like the safe coin. It's a good stable. Now that narrative is starting to shift. Do you do anything to mitigate risk? Do you have a different amount of stables, different percentages? Do you treat it like an altcoin portfolio, or are you just YOLOing into one? What's the Forrest strategy here? Besides run.
Yeah, right. You want to diversify. Just like you diversify your crypto portfolio, you want to diversify your stablecoin holdings, unless, of course, you just have YOLO'd everything into crypto at the bottom there at $900 ETH and 17K Bitcoin. Then good for you. You have 0% stablecoin allocation. You nailed it, and are feeling pretty good right about now. But if you have stablecoins, you want to have some USDT. And this isn't financial advice, of course, but USDT, USDC. People are iffy about USDT. But at the same time, if you just go and throw all your eggs in the USDC basket and then something happens, you get sent some Tornado or some ETH out of Tornado Cash, maybe your wallet becomes blacklisted, your USDC is all of a sudden worthless. You want to have both, and you probably also want to have some DAI. You probably also want to have some Binance USD, and you probably want to have some Frax. Frax is an algorithmically and semi-collateralized stable coin that is like, I believe, the 5th largest. It's got like a $1.6 billion market cap. It holds its peg pretty well. But for the space as a whole, we want to see the stable coin space become very fractionalized. And what I mean by that is we want to see competition. We don't want to see USDT have a monopoly or have a large market share. Why? Because if USDT goes under or there's a bank run and we figure out that all the shady stuff that Tether's been doing in the past comes to fruition, comes back to bite us, we don't want that to collapse the entire crypto space. So what I want to see is healthy competition between the centralized, collateralized stablecoins like USDT, USDC, and BUSD. And I also want to see some algorithmically backed stablecoins, both on chain, on Ethereum like DAI and Frax, increase in market share. Now, those are a little bit scary after we just saw UST, Terra Luna just completely collapse. But in the long run, what's healthiest for the ecosystem is for people to, for the space to fractionalize. And the way that happens is for people to diversify their stablecoin holdings if they can.
All right, great advice there. All right, now interpret. Don't worry, I'm gonna bring it back to Bitcoin here. Max brought up the point. Eventually, we might see some stablecoin action on Bitcoin here. What do you think the Bitcoin community would react to a large legacy institution like USDT or USDC trying to interact with the Lightning Network? Would they prefer that just because it's tried, it's true, it's tested, or would they prefer a Jack Mallers type Lightning Maxi, Bitcoin Maxi, and say, no, we got a new one. It's the Bitcoin way. It's Satoshi's dollar, whatever they want to call it. How do you think they are going to react to these big the DAIs, the USDTs, and the circles coming into the Bitcoin space?
Well, I think USDT and USDC both already have kind of a bad name attached to them. USDT has always not really given away what it's backed by, and USDC now has this blacklisting wallets and funds. So Bitcoin maxis don't really want any of these other alternatives. Bitcoin is the first cryptocurrency, and it is, in my opinion, always going to be the top cryptocurrency because it's got all that. It's got a huge community. It's got it's the first one, so it's got that advertisement of being the first one and showing how blockchain works. So for me, I think people will prefer to keep Bitcoin as Bitcoin. Well, Bitcoin maxis will definitely like to keep Bitcoin as Bitcoin, and then all the others can play around and change different things. Obviously, other cryptocurrencies have bigger rewards, they have bigger risks, but then those people that just want to stay to Bitcoin, that's what they're going to continue to do. Because in the long term, I do think, although altcoins and different coins can give huge rewards, you always take profits back into Bitcoin.
Interpret, just a real quick question. What do you think a Bitcoin maxi would rather spend at the gas station? They're just buying a 20-ounce bottle of pop or soda or whatever you call it over there. Would they rather spend Bitcoin or a Bitcoin stabilized dollar or a stable Bitcoin dollar?
In the short term, a stable coin, but in the long term, Bitcoin will stabilize over time, and then it can properly become the currency that people can use on a day-to-day basis. But at the moment, people aren't going to want to, go and spend on the expensive gas at the moment, go and spend that on Bitcoin on it. They'd rather wait for a longer period of time.
Yeah, that's the thing. They don't want to wait for the next bull run. They want to wait 40 years. It's like, we're a little high right now. Maybe you should spend your Bitcoin. You probably buy it cheaper later. No, 40 years. I don't care if it's overbought on the RSI. 40 years. All right, let's move. I kid those who have diamond hands. Like, hey, I too ride my coins down. So hit that like button if you're also known for that. All right, let's move on to the last topic here. We're going to talk Acala. ACA. No, not ADA. I know I usually talk ADA. No, we're talking ACA. This is a 3-month chart, but you can see on the 7-day, just a huge leg down right there. Massive spike down, but not as big as you would think. It was a Polkadot-based DeFi platform, and they had a USD that leads us to our next. It was called aUSD, and it fell 99% after they found an exploit with the liquidity pool. They brought in some of that new IBTC. We just covered this last week too. Polkadot integrating Bitcoin. Well, it didn't take you maniacs long to exploit it, and they all of a sudden were able to mint 1.28 billion aUSD. They weren't able to cash out all of that, of course, at those prices. Very quickly fell to below a penny. I think it took about 20 minutes to lose its peg right there. Network trades have been paused. They have it down in maintenance mode at the moment right now, so don't worry. It's stuck at a penny. Now, I don't know what it is right now at the second, but all right, Forrest, We're talking stables. They have not been that stable lately. I don't know what is going on here. Is this going to be another victim that can maybe never recover, or because it's a smaller protocol and Polkadot, it's a lot newer, do you think maybe they can recover and have a chance here?
Yeah, I mean, maybe they recover long term. I mean, it's still very early in the crypto space. There's still exploits every other day, it feels like. So, I mean, obviously, there's been very solid projects, very solid. I mean, Solana had the wormhole bridge hack. Solana's still around. Now, obviously, Solana is way bigger than Acala. However, Acala is associated with Polkadot. Polkadot's about almost the size of Solana. So I do think that long-term, years from now, people aren't going to be necessarily thinking about this one isolated incident. However, just from a user-based standpoint or a user standpoint, you got to be really careful when you're using these smaller chains. I mean, we even saw it with the wormhole bridge with Solana, and Solana is really a large cryptocurrency. It has a lot of TVL on its chain, but even if you go up back in the day to Ethereum, there were exploits on Ethereum back in 2016, I believe. So, yeah, I mean, you really got to be careful. As soon as you start going into this newer technology, the risk of an exploit is going to go up drastically. So if you want to play around with some of these stable coins, these algorithmically backed stable coins, and mess around with DeFi, personally, yes, the fees are rough on Ethereum, but I'd probably recommend Ethereum, if not some larger chains, not something like Acala, which is, and again, the APYs might be really attractive, but you have to account for that in your risk. As soon as you go down the market cap into newer technology, the APYs are going to be higher, but that's also because there's more risk. So I'd personally recommend staying with some of the larger caps, mess around with DeFi on Cardano, mess around with DeFi on Solana, Ethereum, even Binance Smart Chain, AVAX, but probably don't want to go with anything that's not in the top 15 or so.
Yeah, I would throw Cardano in there as well. Sunday swap, Muesli swap. Now, Taco, he brought up a good point. Those APYs are high at the beginning. You have experience, adding liquidity to pools, trying to get that extra bit of yield. The earlier you get in, sometimes it could be safer. Sometimes the last ones holding the bag are left with literally nothing. And that's what we saw with UST on the Anchor protocol. Do you have any general advice for someone that they have those stable coins and it's just sitting there looking boring? They want to earn that percentage yield, that double digits even. What general advice would you give out to the degens whose palms are starting to itch?
So BitBoy actually came out with a video this weekend, pretty much strategies for crypto in the bear market. So one of them was like, do your research on these random chains. I've never heard of this chain before, and it sounds like they messed up they misconfigured the liquidity pool, which caused for a hacker to be able to drain it. So it sounds like they didn't do like the auditing, the necessary steps in order to pretty much prevent this from happening. But to answer your question, yeah, this is the time to do the research on those like micro caps, those mid caps, and see which ones actually are like partnering with the right people. They have the liquidity pools. Usually when you get into a liquidity pool first, it's going to be the highest APY and you're taking the most risk. As more people kind of learn about it, the APY will go down. So for example, Sandbox and Matic, I'm staking in their liquidity pool and I'm getting around 32% annually. So at first it was around, I think like 100, maybe even 200%. So those first people reaped all those rewards. And for a legitimate liquidity pool like Sandbox, I trust Sandbox, I trust Matic. I'm okay putting my money in there and reaping those rewards. But on these other kind of lower cap, I would have to definitely do my research and keep my like degens to maybe like $100, depending on how much money you have, and of course not financial advice. But yeah, just do your research.
Yeah, no, that's good sound advice. Just do your research, and maybe you find some the writing on the wall, so to speak. All right, now Max, Nomad also had a hack recently, and they tried to come up with a solution to get the funds back, and they said, "Hey, Mr. or Mrs. Hacker, keep 10%, give us 90, and you get a 10% bounty on all the funds that you stole." And we call it a bug exploit finding fee. Should they do the same? I mean, is that a possible strategy to maybe get some of these funds back?
Yeah, I mean, pretty much everyone tries it, right? It's like the thief has come, they've cleaned out the house. It's like, hey, give us 90% back, and we won't press charges. Basically, we'll let you be. You can even be a hero.
You keep one couch cushion. Just give us the rest, and we won't call the cops.
Yeah, so of course, I mean, it's worth a shot, right? And I think there has been some examples of people actually doing that. So why not give it a shot? But I think it's just a really important reminder for everyone. Like this space, the entire crypto space, it's just so important to understand that there's just, I mean, tens of thousands of projects out there, and they're all competing and racing to get a new feature, to get a new this, to get a new that. And by definition, you're going to see the vast majority of people and entrepreneurs out there and coders, they're going to rush to get things to market. And that's when mistakes happen. And so, but it's going to cost people a lot of money. But then, you hear the stories that when some of these things land, and so people, get in early, put in $100, and then they're worth $100 million 12 months later. These are the kind of crazy stories that happen. So you have to understand your personal risk profile going into this. So what kind of an investor are you? Are you sprinkling 1,000 lots of $100 out there and trying to get one big wave to make up for, all the losses that you're going to suffer? Now, that's just for you as a personal investor. But then I think you got to think about, okay, well, what does society want? What in the long term, what do we actually want? I think everyone can agree that we can't have, a system long term that grows to trillions of dollars and actually solves the world's broken financial system. And then there's, people racing to compete with each other and basically screwing up protocols and billions of dollars going missing all the time. So there has to be like an absolute. You have to know where you fit into the system. You eventually, effectively, a VC person is just sprinkling money around, or you want to support something that helps the world. And we've got those leaders. We've got Bitcoin. We've got Ethereum. We've got all those things. And so long term going forward, you have to understand that sometimes it can be boring watching Bitcoin. Sometimes it can be a little boring watching Ethereum compared to some of the other chains who are moving really fast. But as these things change, then you're taking on more risk. And it's very, very important to realize that now. We've got. I'm not anti-Ethereum. I have Ethereum in my portfolio. I like Ethereum, but it's coming up to a big, big change here. And people, it's like, oh, this new feature. Everyone's going to be so happy afterwards. It's going to be so much better, and the price is going to skyrocket. How can I lose money? This is how you can lose money. As good as those Ethereum coders are, they're doing maintenance on a Jumbo 747 flying through the air while it's in the air. And that's just the life of crypto, right? And that's what all the chains have to do. It's what everyone has to do. And it's a great team, and the potential rewards are there, so it might be worth the risk. But this is a really important reminder coming up to the Ethereum fork, I think. Just understand that these things can happen. And you need to know that going in with your risk management portfolio. I
think you summed it up perfectly. You start asking yourself, how can I lose money? That's the moment. Now. You're losing it now. All right, last question on this topic. Interpret. Once again, I'm going to bring up Bitcoin. I hope you don't mind here. But do you think the Bitcoin community, I don't want to say maxis, but do you think the Bitcoin community strongly believes in Bitcoin over all other coins? Do they actually want DeFi? Yes or no?
I arguably no. They want the blockchain to be used for a store of value. Now, DeFi has all these problems, and we have all these pools that are getting hacked and things. And I think people are trying to gain back their money too quickly. People are in a rush to make up their losses, but there is no rush in crypto. There's so many opportunities to make money. There's so many altcoins that will do well in the next bull run, and people are going into big APYs just to try and make the returns, but the returns come back down so quickly when the APYs start so high. So people just need to relax a bit, and the bull market will begin, and people will start to make money again. And these pools, you need to be careful, do your due diligence, and just don't rush into something because it looks great at the time, because it's probably not.
All right, great answer by Interpret Cryptos. Actually, right now, we're 11 from Stranger Things goes into her psychic sphere. So coming right now from the upside down. All right, that is all we have. I don't know if you've seen Stranger Things. That's what it looks like. But I think we got Max Wright as the winner there. Max, you ended up pulling it in. It's just giving us those words of caution. Feel free. Lead us into Tuesday with some parting thoughts, please, my friend.
Yeah, I said at the top of the show, we're at a really, really interesting point at the market, and the big question is: are all of the big macro issues factored in and priced in? Because that's what's going to determine everything for us right now. But having said that, just had a really important discussion on my channel. Check it out, Contrarian Dude, talking a little bit about China and the dangers there. They could be days or weeks away from a massive implosion and a 2008 style moment, which would send to all markets tumbling. So well worth checking out. But guys, consider your risks. We're at a really important point right now, and it's going to be a lot of fun watching it over the next few weeks.
Yeah, and don't look at Chinese real estate versus U.S. real estate market cap. It will scare you, and you'll want to watch that even more. All right, that is all we got time for today, BitSquad. Until next time, easy out. And Frankie Candles is live right now, and brand new video from NFT Alpha. Make sure you check them both out.